What's up, guys? Welcome to Crypt-Economy. Let's have a look at what's going on in the US markets and the world economic markets, and then we'll go from there. Number one, we are looking at some relief off of yesterday's crash. And I am calling it a crash because most of the indexes, if I just show you what happened yesterday, if you look at Australian shares, they tanked 5%. Japan's Nikkei was 1.74% down. Hong Kong, Hang Seng, 1.44%. China, 1%. India, also 3%. If you look at other US-based markets, S&P was down about 4%. NASDAQ was down more than 4%. Dow Jones was down almost 3%. Now, if we look at S&P 500, we are down by more than 20%, and that confirms a bear market. That confirms a technical bear market. Now, we might be in a technical bear market already, but we are yet to see a fundamental bear market. And why so? So a fundamental bear market is what I call basically two successive quarters of negative GDP growth, which is what we call a recession, right? And I think that's what I'm referring to when I say fundamental bear market. That means the second quarter for US also comes out to be with a negative GDP growth. The announcement is going to be on 28th of July, so we are waiting for that. But you bet we are going to see more volatility in the markets across the globe, because right now dollar makes one of the biggest markets in the world. And the repercussions of all of this are being seen in the startup economy, in the existing business economy. So let me maybe take you through what's happening right now. If we look at what's happening, let's say on the inflation and the interest rate front. Now, economists, they are saying that all of the data of whatever is happening, it is not going to keep the Fed from hiking the interest rate this week by a larger than usual amount. Now, a lot of the crash has been in anticipation of that. But then again, once they get increased, we might see some more pullback. And some people are actually speculating that it might be the largest increase since 1994. That should be about triple the usual amount. Now, the yields, if you look at the yields on T-bonds, the yield on the 2-year treasury bond, it fell back below the 10-year yield. Now, what does this mean? 3.32% versus 3.35%. This means people feel that 2-year time period is going to be more volatile and worse than the 10-year time period. So people see markets in a good position 10 years from now as compared to, or in a better position 10 years from now as compared to the 2 years from now. Now, usually this happens when people feel that the 2-year time period, the immediate 2 years preceding whatever month or year we are in, are going to be volatile and kind of bear market recessionary periods. So this is a very, very important fact to understand, that people are looking at a 2-year period being more volatile. If you look at other banks, including Bank of England, they've been raising rates. India, repo rate has been increasing as well. European Central Bank said that they are going to do so in next month, which is July, and also again in September. A lot of printing has happened in the last couple of years, and now we are looking at the repercussions of doing that much printing, of introducing that much liquidations, or rather liquidity, my bad, into the markets. Now, another big news comes in as we see American cosmetics company Revlon filing for a Chapter 11, or planning to file for a Chapter 11 bankruptcy due to a long decline in sales, unfulfilled supply chain demands, and more. Now, we've seen brands like Revlon, which are huge brands and brands who have been here for decades, facing problems with newer startups, people who've taken their products, or taken products such as Revlon, kind of improve upon them and then introduce them into smaller markets. Now, supply chain is a big issue even right now, and we are going to see more problems. And if a great example is, if you open Apple and you try and order something off of Apple's website, you'll see timelines that are down 2 months 2.5 months. Yeah, that's a problem. That's a problem for our economy right now. EV startup Electric Last Mile Solutions, ELMS, they have actually announced it, that they are going to file for Chapter 7 bankruptcy, or they've already done that. If you look at what's happening in the markets, crypto exchange Coinbase, they've slashed their staff by 18%. Now, they had stopped hiring new people. In fact, people who had actually accepted Coinbase offers, all of those offers were actually rescinded earlier, a few weeks ago, and now they are slashing 18% of the people who work at Coinbase. Now, another one. In announcing a new massive layoff, Coinbase joins the list of growing firms. Now, what are these growing firms? So, Gemini Exchange, which is run by Winklevoss brothers. Yes, you heard that right. These are the guys from Facebook social network. Yes. Crypto-friendly trading platform Robinhood has also fired people. BlockFi has hired people. And how much? 20% of their staff. This Monday, which is yesterday, by the way. Crypto.com CEO also has laid off, or Crypto.com rather, has also laid off 5% of the workforce, which is 260 people. In total, more than 20,000 people have been laid off. Whereas if you look at Binance, they actually announced that they have 2,000 roles open for engineers, product marketing, and business developers. So Binance has come out and said that yes, crypto space is in its early stages. Bull markets tend to care more about price, while bear markets have more value conscious teams that continue to build the industry. We see this as a great time to bring on top talent. That's what CZ said, who is Binance CEO. So this is more or less what's happening in the markets. Let's have a look at Bitcoin and whatever happened with this wick here. On a weekly time frame, we kind of dipped down below under 200 weekly SMA, which has historically proven to be a good support during bear markets, and now we are trading back above it, which is a good news, but definitely not, because we had this crazy wick that kind of destroyed everything for a lot of people. It caused a lot of panic in the market. Ethereum has it the hardest, because it's one of the most well-respected cryptocurrencies out there, and it has seen the kind of decline it has. It's crazy to see Ethereum face this kind of decline. And along with all of that, look at what happened to Bitcoin dominance. Usually in these markets, the dominance should increase, especially when Bitcoin falls. But no, altcoins actually pumped. Yes, altcoins are pumping. And of course, there are speculations around this. I personally believe that altcoins are being pumped to clear out the short people, or kind of liquidate the shorts. And then we are going to see the dominance come back up. Bear markets are very, very risky, especially with altcoins. It's definitely not suggested, or definitely not recommended to hold or to buy altcoins before we are in an accumulation phase, which usually kind of succeeds that more than 50-55% dominance level. Once that happens, Bitcoin kind of gets stuck for probably, I'm guessing probably a month, 2 months, and we'll see some more downside. Now, given the macroeconomic situation right now, given 28th of July, we are going to see if we are actually fundamentally in a recession or not. In case we are going to see an extended bear market, and we can see Bitcoin going even lower to the kind of 19 to 20K price point. And then, of course, there's a lower range of $16,500 to about $17,500 price point as well. Now, there's been one time where Bitcoin actually fell below 200 weekly SMA and touched the 300 weekly SMA. So I'll suggest checking out Plan B and his tweet, and Benjamin Cohen's response to Plan B's tweet around 200 weekly SMA being support. This is the point where we touch 300 weekly SMA. Not a lot of people track 300 weekly SMA. That means there is a chance we might see Bitcoin around 300 weekly SMA, which comes down to be around kind of, if I'm not wrong, 15,000 level. Correct me if I'm wrong on that, please. That's something that I don't track as well. Now, this of course does not mean that you don't DCA here, and this does not mean you put all your money into the markets. It's very, very risky right now. But if you are an SIP investor, if you're an investor who DCAs every single month or every couple of weeks, you are just, or rather you are going to do just fine. Now, if I look at S&P 500 before we go to the next thing, we are looking at some consolidation here after we saw that massive stupid looking gap here Like, this is crazy, right? A lot of gap openings, and that's a classic sign of bear market as well, by the way, or a very very peak bull market as well, right? Gaps are right there. So we are at a very important support level, by the way. If S&P breaks this, it's definitely negative. And the point with the 20% from all-time high thing, if I just open up kind of almost all-time high, yeah, we are technically in a bear market. We are 22.5% down from the all-time high. So that puts us in this kind of a weird situation. That's why you are looking at a lot of these red stocks all over the board. Now, specifically, I know a lot of you guys are interested in tech and in great value companies, maybe not even growth companies, right? So on the value front, a couple of stocks, then this is not a buying recommendation, I'm not a financial advisor. A couple of stocks that you should study, in my opinion, is Berkshire Hathaway. I would suggest look at what Berkshire guys are doing. I think they're very very smart. However, I'm not really sure about the Occidental and the oil and the energy move that they've taken, that Warren Buffett has taken, but it's pretty interesting to see him doing that. So Berkshire is something that you might want to study. You might want to study Amazon, might want to study Apple. I think both of these companies are near monopolies. Same goes for Google, which also feels like a near monopoly in the search, if not the monopoly in the search ecosystem. Definitely maybe not even two, Apple, Google, Amazon, they might be a great quick study if you want to, from a fundamentals perspective. And also from a technical perspective, I think Amazon is down about 40+%. Apple is down kind of almost 30% from all-time high. Google similar as well. However, that does not mean that they are fairly valued. It does not mean that they won't fall further from the current price point. So mind it. A stock which is down 40% from an all-time high does not mean that it cannot fall further. Same goes for an altcoin, same goes for Bitcoin. So please take care on those kind of things. SIP, I think, is the best thing to do. I have doubled down personally on my SIPs from kind of almost when this whole thing started. So that's something that you can have a look at, see if it fits your financial planning. Of course, you need to make sure that you have your emergency fund just in case you lose your job. I've done the same just in case I lose my job. It's very very important to look at all of those things during these kind of market phases especially. So that's it, guys. This is quick update for the day. Hope you enjoyed it. Hope you found it rather useful, and if you did so, smash that like button for me, guys, and make sure to subscribe to the channel. There's a lot more coming for you guys around crypto and around macroeconomic conditions and around investing in the coming few months. I'll see you guys next time. Take care.